You saw this setup. Perfect break and retest. The entry is mapped. Everything confirmed before the candle closed. Then something happened. You froze, or your hand reached for the stop and moved it wider, or you closed it for 11 pips and watched the chart run 200, straight to your original target. That wasn't your strategy. Something took control of your brain, and it was sitting in your lot size box the entire time. Stay with this. Euro-dollar, 4 hour, clean pullback to a support level. Everything lines up. Trader A puts on 1% risk, places the trade, and walks away. Comes back on 3 hours later. Stop held. Target hit for 80 points. Done for the day. Trader B sees the exact same setup. Same entry, same stop, same target, but sizes in at 10% risk. Then price pulls back slightly after entry. For everyone else, that's completely normal. Nothing has changed about the trade. But the second trader is already leaning forward. His jaw is tight, refreshing the chart on his phone, even though he has 2 monitors right in front of him. By the second pullback, the stop gets moved. After 30 minutes of sweat and indecision, his position is closed at a lousy 5 pips profit. Trader B caught 5 pips of an 80 pip move. Same chart, same setup, same entry. The only difference was one number. Here's what every trading psychology book gets wrong. They tell you to be more disciplined, more focused, more committed to your rules. Work on your mindset, journal more, meditate. That's like telling someone who's drowning to swim harder. But when you trade live, when your position size crosses a certain line, discipline stops being something you can choose. This is something I like to call the override threshold. This is what's actually happening inside your skull when that trade goes wrong. Your brain runs 2 modes. Planning mode, the part that built your strategy, set your rules, placed your stop where the trade actually invalidates. And survival mode, built over thousands of years to keep you alive in real danger. It's fast, reactive, and completely wrong for a trading screen. The override threshold sounds complicated. Here's what it actually is. The position size where your brain switches off planning mode and survival mode takes over. That's it. Below it, you follow the system. Above it, survival is driving. Your rules are background noise. And here's what makes it expensive. Survival mode doesn't feel like panic. It feels like smart decisions. It whispers reasons. It builds cases. It sounds like experience. This threshold is different for everyone. For a new trader, it might kick in at 1%. For someone more experienced, maybe 3% or 5%. But everyone has one. And the moment you cross it, you are not trading anymore. You're just trying to get out alive. About 5 years ago, I ran a backtest for 8 months. 62% win rate. But when I was live trading, 31%. Same system, same markets, same rules. But guess what? Half the results. I pulled 93 live trades. The entries weren't wrong. They were late. Every single time I entered late, my position size was over a number I hadn't noticed yet. I thought I had a focus problem. Actually, I had a size problem. Here's what it looks like on the chart. Setup forms here. Structure clean. Entry signal is this candle's close. My rule is one thing. When this closes, enter. At the right size, the click is automatic, like pressing an elevator button. No negotiation. At oversized risk, the second before I click, the inner voice starts whispering, "Wait for one more candle. Are you sure about this setup? Don't rush into this." That's not wisdom. That's the override buying time. I hesitate, so the entry candle closes without me. And now I chase it. I enter here, 20 pips worse. Same stop distance, worse math. First retest, hits my adjusted stop, closes me out. Trade runs 100 pips to target. The setup worked, the chart worked, the entry was right, but not for me. This is your first binary rule. If entering your setup triggers a negotiation instead of a click, the position size is past the line. Drop it until the click is automatic. No voice inside your head, no pause, just a simple click of a button. That one happens before entry. This next one happens after, when you're already in and the market pushes back against you. It's quieter, it costs more, because by then there's real money attached to a story that's starting to form. So you're in a live trade. Stop here, below this structural swing low. Completely valid, and price starts moving toward it, slowly. At normal size, this moment is a question. Is the level still holding? You check the chart. If it holds, you stay. If it breaks, small loss. At oversized risk, this moment isn't a question, it's a verdict. And your brain cannot let that verdict land. So you decide to move your stop here, then here. And the thought running through your head while it moves sounds exactly like this. I still believe in this trade. The structure is still valid. I'm not panicking. I'm being flexible. That's not a trading decision. That's a survival brain writing a story to justify what fear already decided 3 candles ago. Then price breaks through, drops another 80 pips. The 20 pip planned loss became a 140 pip disaster. Not because the level was wrong, because the size turned a question into a threat into a story, and the story moved the stop. This is your second binary rule. The urge to move your stop wider means one thing. The size crossed the override threshold before you ever entered. Not the stop placement, the size. The next 2 masks are quieter. They don't feel like fear. They feel like experience, like the seasoned trader making the smart call. That's exactly what makes them the most expensive ones. Here's gold, 4-hour, clear uptrend, clean break of this level, and the retest holds. The entry is here. Stop below the retest. Target at the previous high, 180 pips. Risk reward is 1 to 3.6. Everything done right. At normal size, 50 pips of open profit feels like the plan doing its job. Nothing to do. Target hits the following day. At double size, 50 pips of open profit feels like something you own now, something the market can reach in and take back. And the voice starts, lock it in. You've earned this one. Smart traders protect profits. You can always re-enter. So you close at 51 pips. Price ran to 180. That voice sounded like the experienced trader making a sharp call. That was survival mode, making profit feel like a possession, something fragile to grab, instead of a process. Your third binary rule, the urge to close before your target, means one thing. Cut your position size until your open profit feels like watching the plan work, not something you need to protect. The first 3 masks happen inside a trade. This one happens in the 90 seconds after one closes. I blew my first account on a Tuesday afternoon. Not slowly, not over weeks of bad trades. In one session. It started with one valid loss, $50. My stop did exactly what a stop is supposed to do. It closed the trade. But I was new, and $50 felt like blood. And the thought that replaced every other thought in my head was clear. I need that money back. So I switched to the 1 minute, because candles form faster there, and I needed something to happen. Found movement, called it a setup, sized in at double, because if this one works, I'm not just back, I'm ahead. stopped out in 5 minutes. And now the market owes me $150. I need them back. Third trade. I didn't even look at structure. I looked at speed. Which pair was moving fastest? That was my entire system now. I blew the account the next day because I refused to close the trade. Here's what makes this mask different from the other three. Hesitation, moving your stop, grabbing profit early. Those happen inside a trade you're already in. You can catch them if you're paying attention. Revenge happens in the gap, in those 90 seconds when the chart is clean and your brain is not. And it doesn't feel like fear. The other three masks make your chest tight. This one feels like energy, like momentum, like the trader who doesn't quit, who comes back swinging, who refuses to let a loss define the session. That feeling is not resilience. That is the override running at full speed, with nothing left to contain it. This is your fourth binary rule. After any loss, no trade for the next 30 minutes. If 30 minutes feels impossible right now just hearing that, the loss was oversized. That itch you'd feel in that moment, that urgency, that need to re-enter, that's the override telling you exactly how far past the threshold you went. You need a boring number to protect your account, the one specific risk percentage that keeps every trade below the override threshold. You don't need another mindset book, not a trading journal, not a morning routine. A safe, boring number, small enough that the entry click is automatic, small enough that your stop approaching feels like a question, not a threat, small enough that 50 pips of open profit feels like watching the plan unfold, small enough that closing at your stop feels like finishing the trade, not losing an argument with the market. Boring, that's the word. If a trade makes you feel anything, hope, dread, excitement, a tightness in your chest, the size is past the line. Find it, lock it, and never cross it. You now know how much to risk. The next question is, on what? Because sizing down means nothing if the setup isn't real. The next video is the strategy, something specific and simple, built for exactly the brain you just learned how to protect. And this is exactly the kind of setup we break down inside our academy. See you inside.